Welcome to Holistic Accountant Podcast, where we aim to showcase how adopting a holistic approach in accounting and tax maximizes value for clients. Beyond traditional tasks like preparing financial statements and tax returns, a holistic accountant focuses on offering advice that maximizes personal wealth on an after-tax basis. If you enjoy this episode, please consider leaving a rating and sharing it with those who might also benefit. And to ensure you stay updated, subscribe to our weekly email. The link is in the show notes. Okay, today Mena and I are going to talk about creating a will and what are the considerations you need to take into account if you're a business owner. Mena teases me about how old I am, being a lot older than him, and I only feel like this is a bit of a bait, this subject. Maybe it's something I should be focusing on in greater detail. Perhaps that's what he's suggesting. Anyway, it's a really important thing, and there's a lot of aspects associated with drafting a will if you do have, you own and run your own business.
So maybe I'll just start it off with talking about the different types of business structures and what typically happens in the event of your passing. And these are the items that should be addressed in your will. So typically, in a sole trader, you're obviously not a separate legal entity. You're sort of trading under your own name, your own ABN. So typically what would happen here is your business assets and liabilities will form part of your personal estate. So they'll be gifted directly via your will. If you're in a partnership, your interest generally can be bequeathed to your estate, but what usually happens is there's a partnership agreement in place. And this will typically state what should happen should a partner actually pass. And you'll need to check if there's any buy-sell agreements in there. So what will typically happen is that if you're in a partnership, the other partners can buy your interest out at a fair market value, and that those proceeds will typically go into your estate. With a company is indefinite, so it doesn't vest. It's a completely separate entity. So you bequeath the shares that you own in the company if it's personally held, not the business itself. So the company continues to exist after your death. And if you've got a testamentary trust as part of your will proceedings, the shareholdings will typically go into that sort of testamentary trust. With a trust, it really depends on what your intentions here are. With, typically in addition to your will, you'll do what is called a letter of wishes. So you can gift assets that are held by your trust. And then you need to really appoint the most important role in a trust setup is the appointer, because they can nominate who will be the trustee. So what's really important to do here is actually nominate an appointer who you typically trust, and also a successor to that appointer should they pass before you. So typically what we do is we put your personal legal representative as a successor to the appointer in the event that they pass.
The other thing you need to think about is, from a practical perspective, who's going to take over your business? Who will be the successor? So will your family be able to run it? Will they have the knowledge and ability and experience to run it? Is it someone in the business? Should the business be sold just on the open market? So these are the things that you need to really think about. And you certainly want your executor to know, well, either they've got the skill to work all that stuff out themselves, or give them some direction to who they should be speaking to and who they should trust. And you can do that in a letter of wishes. So that's a letter of wishes, just a letter to your executor saying, go and speak to these people, go and speak to my holistic accountant. They're great, and just follow their advice. They'll look after everything and pay them whatever fee, where you can dictate the sort of fee arrangements and so forth. That way, the executor is not going to necessarily be burdened by those decisions. They can just oversee what's going on. You might want to think about having a buy-sell agreement. So if you have other partners in your business, other owners, quite often, like Mena and I are in business. Now, if one of us is to pass away, we don't necessarily want to be in business with each other's wives. We love our wives. They're fantastic people. That's not a criticism. But, you just want to make sure that it's all above board. And so you would have a buy-sell agreement in that situation. So if I pass, Mena takes over my share of the business, and those monies then go into my estate. And if you then need to really think about the valuation of the businesses as well, and how are they going to be valued. So if you sell them on the open market, that's relatively easy. The market will dictate the value. But if you're selling to people, inside the business, or new buyers, they might be working in the business but not yet owners, then you want to set out how the valuation will work. And actually, just one thing that just came to mind, Mena, talking about in terms of the business structure and handing over control. there is something called a successor director that it's a document that you can prepare that says that this person becomes a director if I die. And the benefit of having that could be that normally your personal legal representative can appoint another director, but they've obviously got to go through probate first. And if there's any challenges or delays with respect to that, that could actually hamper a business in terms of executing documents or managing that business on a daily basis. So sometimes a successor director resolution can be a good way to accommodate that, or even having an alternate director in place, which again, if you're traveling or doing those sorts of things, having an alternate director or having a power of attorney is good to think about as well.
Yeah, good segue into the next one where we talk about sort of control of entities. In that case, what Stuart was mentioning is that, you also got to consider your constitution, what the constitution guides in the event of your death. And it's always great to create an inheritance entity map. And I know it sounds silly, but it's sort of like an in-house structure of what should happen and who should take over in the event of your passing, and who controls what and who's responsible for what section of your business. It just makes things a whole lot easier for your family, because although you might have a great business, your family might not know the ins and outs and the details behind it, and they might not know how to run it. So sometimes it's great to have that visualization for your staff and your executor as to what to do in the event of your passing. Similarly for trust, and I mentioned before, the selection of your appointer is crucial, almost more so than your trustee, because the appointer is the highest power in the trust that has the ability to add or remove a trustee. So it's really important that you select an appointer that you trust, and also nominate a successor to your appointer in the event of your passing.
Okay, so you'd be familiar with power of attorneys, or, well, if I probably should explain it. Most people, as part of their estate documents, have powers of attorney. And a power of attorney just means you can have financial or medical. They're the two types typically of power of attorney. It can be limited or enduring. Enduring means that it doesn't expire. And normally you'd have a power of attorney to appoint your spouse or, someone else so they can execute documents if you're unable to do so. So if you're traveling overseas, those sorts of things. And it's a normal part of estate documents, of course. That power of attorney doesn't necessarily allow you that your attorney to execute documents for your capacity as a director of an entity. You need to have a corporate power of attorney to do that. So that's something to think about in terms of, making sure that people can make decisions on a timely basis. Who can you appoint as your corporate power of attorney? And that might be still your executor or whoever else is your personal power of attorney, but it can be a separate document. It's a little ambiguous of whether a personal power of attorney, whether that attorney can act in your capacity as a director. And so that's why I'm saying that corporate power of attorney just removes that potential issue. The other thing, as I mentioned previously, is having an alternate director. Alternate director steps in should you not be available. So they still have, capacity to make decisions as a director. You just need to make sure your company constitution allows an alternate director. If that does, that can also be a good way. At least you don't need a power of attorney, and you can just appoint that person pursuant to whatever the company constitution says. Normally it's just a minute to appoint an alternate director.
Now, when you pass, your will can actually create a structure that is extremely tax efficient and a great sort of asset protective sort of measure too, and it's called a testamentary trust. And you might have heard us mention this a few times in the past, but it allows income splitting in a very tax effective way now, because it allows you to distribute to minors adult tax rates. So typically, if you have a normal sort of family or discretionary trust, any minor, so a person under the age of 18, can typically only receive $416 tax-free. Any income above that is taxed at a much higher tax rate. Whereas with testamentary trusts, you're allowed to distribute to minors at adult tax rates. So, for example, they get the 18,000 odd tax-free threshold and so forth. So it can be a great vehicle to sort of income split and provide sort of wealth for future generations. So it's important to have this in place as part of your will to navigate things such as capital gains tax, income from your business, income from your investments and so forth. It's an incredibly tax-efficient product, and it's a product that allows you to sort of protect your assets and ensure that it's passed on in the way that you intended it.
The next thing to think about is liquidity. So, upon your death, the estate may need to pay sort of taxes or debts. If they need to buy out a business partner, for instance, maybe the whole business moves into the estate, to cover any costs around servicing debt over that time, you need to think about how that's all going to work. And, one of the ways that you can fund that is obviously having a debt facility in place that's unused that is there for that purpose, or potentially having a life insurance policy over your life, but the business owns that policy. So the business will get benefit payment in the event that you pass away, which is something that we've done at Pro Solution. If I pass away, there's a life insurance policy, and that'll just make sure that the business can go to whatever lengths it needs to make sure the continuity of looking after clients, and that money's never going to get in the way of that and that decision. So it's something to really think about, that liquidity aspect.
Also consider family dynamics. Obviously, if you're in a mixed or blended family, or even if you've got a family member that works quite actively in your business and other sort of children may not, consider the succession planning of it. So how it works in terms of, okay, you might have one child that is nominated as the CEO of the business after you pass and director. How can you sort of ensure that the income is split evenly between all your children? So you will typically state, the roles and responsibilities of that director. Obviously they'll receive a fair remuneration for the work that they do in the business, and then the profits of the business, how that's typically dispersed. So also consider things such as if, your children might be in relationships that might be on the rocks or have been in the process of a relationship breakdown. How do you ensure or protect your business from, claims from the other partners? So you might want to do or consider bloodline testamentary trust, so meaning that only the beneficiaries who are directly related to you will receive those benefits, and what they can actually do with those funds as well.
The final thing to talk about is really selecting an executor and understanding that executor might be a different person for your business and for your personal situation. Now, obviously, your personal estate plan will kind of control the ultimate proceeds or the ultimate value of the assets in your business. So they're kind of integrated. But it's possible, and probably likely perhaps, that the person that you might want to look after your personal side, particularly if you've got, if it involves guardianship and children and a lot of other personal matters, might not be the same person that has the skill and expertise to look after your business side. So having a business executive, which would kind of be like a successor director, they could then take control over that, and you would then give them instructions through your letter of wishes of what to do with the business. And then your personal executive would kind of oversee that role and just make sure that it's in line with, ultimately what's going to benefit the beneficiaries. But it's a good way to sort of think about those two roles. Also, finally, you want to think about how often do you need to make sure that the structure is correct. And one thing that you want to think about too is you don't want to go and rewrite this every couple of years. It's going to give rise to a lot of cost and takes a lot of time, and it's a lot to sort of think about. But by the same token, you don't also want to put it in the drawer and not think about it for 20 years, and it could become outdated. So I think if your business structure changes in terms of acquiring business, or, your ownership structure changes, or there's major personal changes in your life, death of family members, divorce, these sorts of things, that would necessitate kind of a review. But the other thing, just on a year-by-year basis, just making sure the people that are going to run the show are still the right people. So, who your successor director is, who your power of attorney is, who your legal personal representative is, making sure those people are still up to the job. I'd probably do that every year. Hopefully that nothing needs to change, and then just wait for something significant to change in your financial situation that might dictate, rewriting or redoing the estate plan. As you can see, there's a lot involved when you're in business and a lot to sort of think about. Of course, if you've got a very new business or a very simple business, you don't need to overcomplicate it. But if you've got a very valuable business, of course, you need to make sure that your plan is comprehensive enough to accommodate that. Okay, that's enough for us for this week. Until next week, bye for now.